Welcome to our webinar featuring options for lower costs and better coverage for your county or pool's workers' compensation program. My name is Mark Levine, and I'm the Deputy Director of your New York State Association of Counties. We are pleased to have experts from the Public Employer Risk Management Association, or PERMA, with us here today to delve into new workers' compensation options that are available for counties and county workers' compensation pools that were designed specifically to provide better coverage, risk management, and claims processing. PERMA is known for their comprehensive risk management solutions for public employers. With a wealth of experience and expertise, PERMA is a trusted partner in helping organizations effectively manage their workers' compensation needs. Before we begin, we have a few housekeeping announcements. I'd like to introduce Jeanette Stanziano, the NYSAC Director of Education and Training, to give us those announcements. Jeanette.
Thank you, Mark. We will be recording this webinar, and we'll have the recording with a PDF of the slides used during the presentation posted on the NYSAC website under www.nysac.org/webinars. Just look for today's date. We encourage you during the program to feel free to submit any questions you may have for our presenter today by referring to your dashboard, clicking on the questions tab, and typing in your question. All questions will be addressed during the Q&A at the conclusion of the program. Back to you, Mark.
Thank you, Jeanette. Our speaker today is Tony Casero. He's the Senior Sales Executive for Marketing and Underwriting for PERMA. Tony has been with PERMA since January 2019. He has nearly 40 years of experience in the insurance industry, working for insurance carriers, third-party administrators, and pool administrators with a specialization in workers' compensation. Tony has over 25 years of experience as a claims adjuster, supervisor, and claims manager, and also has held various positions in managed care, account management, and sales. He holds a Bachelor of Science degree in economics from Siena College. He has a license in, he's a licensed New York State property and casualty broker and holds a New York adjuster license. Tony, it's great to have you with us today. We appreciate you bringing your experience and expertise to our members. Without further ado, Tony Casero.
Thank you, Mark. We appreciate the introduction. Welcome everyone to this webinar. We'd like to cover the PERMA program and options available for county government for their workers' compensation coverage. So as Mark indicated, PERMA is the Public Employer Risk Management Association. We were established in 1982. We can cover New York public entities that are taxing authorities. We currently cover over 800 members throughout the state. They're comprised of county government, cities, towns, villages, fire districts, water districts, authorities. We have 12 counties within PERMA, and 9 of those counties are county groups, so county plans that have joined PERMA. We have 18 schools, including New York's largest BOCES program. PERMA has a board of directors, which is elected from our membership. We have 2 appointed partner association members of our board. We are an all-inclusive claim administration and risk management service company. This slide will show our association partners. Obviously, NYSAC being first and foremost, sponsoring this webinar. So the New York State Association of Counties, we have the New York State Association of Chief of Police, we have the New York State Association of Fire Chiefs, and we have the New York State School Board Association. These are coverage options that are available to county government. One of the options would be to purchase a commercial insurance policy. Self-explanatory, you would pay a premium up front and you would transfer the entire risk to an insurance company. I'm not sure that any counties actually do this today. It's probably the most expensive option out there, but it would be available to any county wishing to do so. Another option, which is probably the most popular one out there currently, is to self-insure individually and or your own group plan. This would be where a public entity assumes all the risk and is ultimately liable for all the claims incurred. You may purchase an excess insurance policy, which would cover you for catastrophic claims. That may or may not be done depending on on a county's appetite for risk. The other option is group self-insurance, and this is where PERMA comes in. In this instance, you would transfer your risk either entirely or on a deductible basis to a pool association. And PERMA would be that pool association able to offer a deductible program. This slide will show you what workers' compensation self-insurance looks like. You have your annual costs. That would be your claim costs. That would include lost wages and medical benefits relating to a specific work-related injury. You essentially, in this mode, you pay as you go with or without funding claim liabilities. We'll talk about that a little bit later in more depth. In this instance, you would hire a third-party administrator to administer the claims. Again, you may or may not purchase excess insurance, which would cover you for catastrophic claims. If you choose to employ risk management and safety training, these are typically additional costs, as would be fraud services and or legal services. And there's always legal services necessary with any workers' comp program. There's litigation at times related to specific claims. Sometimes claims are controverted, which just means they're denied for whatever reason. There's a question of compensability. There's a question of the medical relating to the injury reported. So that typically results in legal services that have to be hired separately. One of the challenges of self-insurance are the rising statutory benefit rates, medical costs, and self-insured retentions. The self-insured retentions would be related to any excess insurance that you purchase separately. The financial burden to development of long-term claim liabilities. Essentially, a workers' comp claim can be open for several years after it's initially reported. Under the workers' comp law, an injured worker is entitled to medical benefits for life. So as an example, that could be an ongoing cost that goes on infinitely. There could be permanent disability cases, which are set up on a schedule, and they could be paid out over several years. Ultimately, a claim develops over time due to change in scenarios, surgeries that were not previously contemplated, settlement considerations. Those are your long-term claim liabilities. So the value of a claim happening today can change significantly over time. Any additional TPA services are an additional cost. We talked about any legal fraud services. You would pay those TPA services separately. Revenue for a third-party administrator is actually claim driven. They basically set their rates based on how many claims you have. So they're essentially incentivized by claim volume, which obviously is not in a county's best interest. The next slide is self-insured public entity pool coverage. First dollar coverage is essentially, this is where you would transfer the entire risk over to a PERMA. and that would entail us collecting premiums similar to an insurance company. We would take on all the risk, we would pay all the claims. The county would have a predictable number, and they would not pay any additional funds associated with the actual contribution premium. It's an annual fixed rate. Excess insurance is included in the pool. You would not have to purchase that separately. We would administer payment of your quarterly New York State assessments. We would actually collect those funds with the premium and file the quarterly report and pay it on your behalf. All future risk is transferred to the pool, eliminating any financial burden of potentially unfunded claim liabilities, which we previously spoke about. Again, I can't emphasize enough, a claim that has a value of $50,000 in 2023 might suddenly have a value of $750,000 in 2025 due to claim development, change in circumstances, surgeries that were not successful, permanent disability classifications, and so on. One of the things we really wanted to talk about today is recent developments with regards to New York State legislation that was passed. It was introduced in 2023, New York State Legislature. Governor Hochul signed this law into effect in the fall of 2023. It permitted a non-for-profit public group self-insurer to offer public sector members workers' compensation coverage with a high deductible. This affords a whole new solution for New York State counties, potentially saving taxpayers money through participation in a much larger group. One of the things I studied in college was economics. Actually majored in economics, and one of the principles that always came back was economies of scale. And that really refers to more people a larger group can purchase services for less money than a smaller group. Again, PERMA is comprised of over 800 public entities in 2025. So there's significant funding there to be able to have us offer the very best and most cost-effective coverage possible. This legislation was supported by a variety of public entities, including NYSAC. Again, fall of 2023, signed into law. It has become effective January of 2024, and we have had counties opt into this program successfully and transition from self-insurance. Some key provisions associated with the New York State large deductible legislation. The public group self-insurer must be fully funded. That's very important. Again, PERMA is very well funded today, and we are reporting a surplus. We'd be glad to share those statistics afterwards if anybody's interested in them. There is associated with this program, there is no joint and several liability within the legislation. That is significant because you would never bear liability associated with any other group member in the event of insolvency. You would any public entity would not be responsible for someone else's claims, and that's important to note. High deductible, it's not a full transfer of risk, but it would be a partial transfer of risk because we would set a deductible based on your appetite for risk, and that deductible would be written on a per occurrence basis. And you would, in exchange for that, there would be a reduced upfront contribution. So unlike the first dollar, where you pay a full premium to transfer the entire risk, in this instance, you would pay a lower upfront premium, and you would be afforded cash flow. And again, if you're currently self-insured, you're entirely you're used to that concept because you're taking on the full risk and you're paying you're paying the claims entirely up to your self-insured retention. Benefits of this program is it offers budget predictability. Again, similar to First Dollar, you can put a more certain number as to the ultimate cost, annual cost of your program. This program was actually previously available years ago and resurrected in 2023 by updated legislation. But we have had examples where counties were able to greatly reduce their budget and actually utilize those funds to fund future claim development. So we're able to set that money aside and pay for those liabilities that have accumulated within their retention or related to their self-insured claims from their prior program. Another benefit would be reduction in county long-term claim liabilities. Again, lower self-insured retentions, lower deductibles associated with a PERMA program compared to what you can purchase in the excess market. We typically see those policies at much higher self-insured retentions, $750,000 and significantly more than that, whereas PERMA could potentially offer you a much lower deductible. We offer proactive claims handling. We're going to talk about our claims department and our risk management department, which are actually in-house, and that's significant to note. We don't outsource any of those services. We're self-administered. All of our staff works for PERMA in-house. Another benefit would be transfer of claims handling expense for lifetime of claims. What that means is within the deductible program, you're paying a premium which includes the full administration of those claims, not just for the policy year, but for the life of the claim. So you're never going to pay an administrator to handle any claims incurred in any particular policy year. So if you were to sign on, had you signed on January 1, 2025, whatever claims are incurred in 2025, you would not pay any additional claim administration ever for the lifetime of that claim. Whereas in a self-insured world, you're paying annually to handle the same claims over and over again. It also includes the allocated loss adjustment expenses, which are essentially any claim expense, and there's a whole category associated with this. It could be medical bill review, it could be nurse case management, it could be PPO access, it could be legal, it could be investigative. All of those expenses are also included in your premium with PERMA. You're not paying any additional fees. Innovative risk management innovative risk management solutions. We'll talk about that a little bit more. PERMA has very innovative programs, hands-on. We are proactive in trying to prevent claims from even happening. So here's our large deductible program. We talked about the first dollar, again, self-explanatory, transfer everything. The county and or county plan in New York State with taxing authority is eligible for this program. Counties retain a portion of the risk for ongoing cash flow. So a much more reduced premium associated with this plan, which would help you with your cash flow. Deductible is applied to medical and indemnity only. I'm sorry, I skipped over predictable liability. You're capped on a per occurrence basis. So that literally means on a per occurrence basis, if you had multiple employees involved in a single accident, that would count as one occurrence. The deductible would not apply separately to each injured worker, but rather that would count as one occurrence. Whatever your deductible is, it applies to that claim. Excess insurance is provided by the pool. You don't have to purchase it separately. Again, administration and payment of the quarterly New York State assessments. That would look the same whether you were first dollar or deductible. And again, even with the deductible, you get all the benefits of full membership as if you were first dollar member. PERMA claims management, again, is in-house. All of our adjusters are licensed adjusters. They work directly for PERMA. We provide prompt response. 3-point contacts are made within 24 hours. EDI compliance, which is essentially any claims administrator has a report card, and EDI compliance is integral to that report card. Our SHROI compliance, which is an acronym for subsequent report of injury. It actually relates to payment of claims, and we have a 99% rating. And we have a 94% rating with reference to FROI, which is first report of injury. So very good scores, very good report card, exceeds state standards, which are currently 85%. And if you don't meet that 85%, you could be subject to penalties by the board. One of the ways that we achieve our great claim results is by requiring or limiting our claim staff to lower case loads so we have lower than average case loads than the industry. We try to cap it at 125 to 135 claims per claims handler. We have in-house nurse case management. They act as patient advocates, so they will be assigned to lost time cases to help facilitate prompt and thorough medical treatment and promote an early return to work. They're all registered nurses. They know the medical treatment guidelines, which are promulgated by the Workers' Comp Board. They will assist with trying to arrange for modified transitional duty, which helps bring an injured worker back to work sooner. And we know that results in a lower claim cost overall. Our claim staff is trained in subrogation methods. Subrogation relates to potentially pursuing a negligent third party that may have contributed to the injury. And there are times where you can recover money because we're paying the workers' comp benefits up front, and we're looking to try to lower those costs by pursuing a negligent third party. PERMA participates in fraud prevention training. Our adjusters are trained in thorough investigations to try to identify those scenarios, and timely case resolution, which is both on the claim side and certainly in the medical management end as well. Our adjusters on average have 16 years experience. Again, they're all licensed adjusters that are handling the lost time injuries. And we will periodically have an outside claim audit. So the 98% that you see on there is our rating that we achieved via a completely independent claim auditor that came in and audited our claims randomly and gave us that report. PERMA has in-house risk management. You know, from site assessments to pest trainings, PERMA offers a variety of solutions that will proactively assist county government in reducing their overall claims costs. We have a dedicated risk management staff. They're all professionals. They have various certifications and trainings. We have a DPW specialist that will work with the Public Works Department. We have a public safety specialist, which will work with any police or fire agencies. We have a school risk management specialist who will work directly with any schools in your program, if you have any. and regulatory specialists and safety coordinators. We do also offer safety coordinator training for any members that are interested in developing that. We will offer the training necessary for it. Again, we promote a safety culture, and we do our best to assist you in accident prevention and safety training. Again, regulatory compliance training and hazard training, all the required pest training is included in your membership. Facility site inspections, annual safety grant opportunities. We have a variety of grant opportunities that are available from, as an example, police agencies. We offer a bulletproof vest and outer carrier grant up to $5,000. We have a gear washer and dryer grant up to $5,000. That's available for fire departments, fire districts. Lexipol subscription for both police and fire, a wellness grant, a school safety initiative grant, safety training grant, slip and fall prevention grant. We have a work zone safety grant and an annual member conference safety initiative grant. All of these grants are up to $5,000, with the school safety grant being up to $10,000 per member. All included within your membership. You would be advised when to apply, and we award several of them per year. Return on investment. So again, harping on counties that are currently self-insured, taking on all the risk, paying for the variety of services that you need to be able to successfully administer your program, the third-party administrator, the legal services, nurse case management services, a variety of a la carte items that would have to be included as part of your PERMA membership. These are items that would be a return on your investment. So PERMA has distributed over $6.5 million to members in the form of loyalty grants. These come up at time of renewal. So depending on a variety of criteria, it could be your performance, your participation in safety training, and your loyalty. So how long you've been with PERMA. Those three items are the criteria for calculating how much of an equity dividend that you would be entitled to when you're up for renewal. We have budgeted over the next 3 years $7.5 million towards that goal. We recently introduced a PERMA points loyalty program, which is in addition to that. It's basically a reward program where you can demonstrate your participation in the PERMA Safety Institute, participation in a variety of programs that we offer. And if you can demonstrate that, you can earn points, and those points can be exchanged for a variety of items, from a luncheon for your employees to various items that are available for exchange on the points. We have budgeted also $1 million for safety grants. We continually support and give back to our members through a variety of engagement programs, safety grants, and dividends. So these are all, the return on investment is something that would be available to you just by being a PERMA member. So again, above and beyond your current self-administered, self-insured program. Mark, we left a lot of time for questions if we have any.
I'd like to invite our attendees. If you have any questions, please go ahead and post those in your questions dashboard at this time. We do have a couple, and then I have some as well. So you talked at the beginning, Tony, about the fact that there are 12 counties in the program, and 9 of those brought county pools to the PERMA program. So can you talk a little bit about their experience? What are they seeing? What benefits are they receiving, and what's their experience been with the PERMA program, Tony?
A great question, Mark. Overall, it's been a very positive experience. We offer a variety of from risk management training to proactive claims management to return on equity programs that they were not eligible for on their own. We've had very positive feedback, but probably the greatest benefit that they've seen is a more certain, predictable workers' comp budget. The numbers that we quote typically hold through, and they've achieved savings that way because oftentimes they're able to utilize their reserve fund potentially to pay off claims associated with their prior self-insured program. And as that happens, what they see is that their overall cost and their overall claim liabilities will reduce over time. So we received very positive.
That's what I was getting at. Are they saving money? Are those counties that have come into the program, are they saving money? Are they receiving? Are the employees getting taken care of?
Yes. Again, the program is a couple of years old, but we do have some experience with deductibles. They were previously available in New York State, and they were right around 2014.
They stopped. Yeah.
They stopped. 2014. They were no longer available. So from 2014 until 2024, 10 years. This program was not available. We needed that legislation to be passed, but we do have legacy members in our deductible program that again have achieved budget reductions and actual surpluses associated with their workers' comp program that they were able to allocate to other lines within their budget.
That's great.
Plain and simple. So there are some great success stories.
That's great. Thank you. And I know, and we've talked about this, and our counties have talked about this. Yes.
I'm sorry. I wanted to introduce Al Campney, our Deputy Executive Director, is also here present, and he wanted to add something to that.
Yeah. So, and thanks, Tony and Mark. I just wanted to add that there's one particular county that joined back in 2012, which was made up of probably 50 or 60 entities initially. Their annual budget was $3.3 million when they joined in 2012. Their annual budget has dropped to just under $2 million as of this year. So they're saving over $1 million a year for their pool. At the same time that they've actually grown the pool, they've added probably 8 to 10 entities that previously were not part of their own group when they joined PERMA. So not only have they become fully funded for their ultimate liabilities, but they've reduced their budget by over $1 million a year. And I just thought that was worth mentioning.
That is worth mentioning. Thanks for that data. That's it really helps to quantify what they've been able to achieve through the PERMA program. So thank you, Al. And we've also talked about counties or pools will go out from time to time every couple of years with an RFP for TPA services. With this new large deductible legislation program, Should counties who traditionally go out for these TPA with these TPA RFPs, should they expand those RFPs to look for additional alternatives? And what does that look like if they want to do that?
Yes, that's a great question, Mark, because we often see those RFPs and they're limited to third-party claim administrative services, which is, again, only one aspect of the program. It costs the county absolutely nothing to expand the RFP language to allow for alternative proposals, which would include a large deductible program. So essentially, a very nice extension of what they're currently doing. They're currently taking on all the liability. This would permit them to transfer part of the risk for a more predictable premium. It includes claim administration. It includes robust risk management services. It includes grant opportunity programs, which they're currently not eligible for because they're not member of a pool like PERMA. And again, we are a non-for-profit, which qualifies us for this program, and we are the only non-for-profit pool in New York.
Self-administered.
Self-administered pool in New York.
Great. And one last question, unless we get some others. So I've met some of these, some of the staff members of the PERMA claims department, and they really care about what they do, and they care about the municipalities that PERMA serves. Can you talk about what the process is when a county or a municipality who belongs to the PERMA program, what happens when there's a claim?
When there's a claim, first and foremost, our claim reporting is online. So we train all new members to be able to report claims online, and that's significant because it instantaneously assigns a claim number to it. Each member is assigned a particular claims unit, which is comprised of a technical claims manager and adjusters of variety of experience, from claim specialist down to a claim adjuster 1, 2, 3, and so on. So you would expect that claim to be reviewed by the technical claims manager with some instructions for the person it's assigned to, the adjuster that it's assigned to, and that adjuster would immediately make contact with the employer. They would make contact with the injured worker, and they would make contact with the treating medical provider to get that initial assessment and the plan for treatment.
Great.
I'll add one thing, Mark, that some of our counties, as Tony said, we have 12 counties and 9 groups in that 12. And some of the county groups like the claims to, if it's a participant in their own group, to go to the county, and then the county submits it to us. Some of them just say, this member of our county group can just file it themselves. So the program allows them the flexibility to either, if they want to keep that centralized control at the county level, they can. If they want it to be sped up a little bit and let the members send it themselves, they can do that too. They still control sort of, how they want to operate the pool, how they allocate their own costs and things like that. So there's a lot of flexibility with that. And even members that do not have maybe the technology to do the online, we have certainly workarounds where they can, get the information to us in an alternative way. So if they're, we do have some fairly rural counties in the plan as well, and some of them don't all have the technology to be able to do that. And one of the cool PERMA grants actually that we put out recently was we provided a remote learning station. Basically, it's a TV and a laptop for members that really didn't have the ability to, you know, get that in their budget and things, and they could actually even use that if they needed to report online and things. So there's a lot of cool things that we do, but we like to let the counties, you know, they have ownership of their group and things, and they like to run it the way they want, and we give them that flexibility.
Great, thanks, Al. I can tell you firsthand that the counties that I have interacted with that belong to the PERMA program really give you all high marks and speak fondly of the program and all of the folks that work at PERMA that interact with the county. So we extend our thanks to PERMA for working so hard and so well with our counties and our county pools. At this point, there are no other questions in the questions panel, so I want to take this time to thank Tony Casero for his expertise and time today, and Al Campney, who's the Deputy Executive Director at PERMA, for joining us today. This webinar has been recorded and will be posted on our website, and the slide deck that was used will also be posted there. Thank you all for joining us today, and we look forward to continuing to provide educational programming to our members going forward. Have a great summer.